Hello everyone. Thanks for joining me today. Let's get started. Sorry guys. So welcome guys and welcome back to my channel. And as you can see, we are holding a live stream today. But here's the thing: we're gonna try today and keep this very simple and practical, right? So we're gonna be looking at a strategy called the EMA pulse strategy. And the idea is not to put 10 indicators or 20, maybe 6 different sort of indicators on the screen and hope that something tells us what to do. And the reason is because we don't want to be confused, and so we don't want to have a bunch of different indicators that we're going to be using. And so we're going to be using 3 different tools today to keep it very clean and simple, to keep our chart very clean and simple. And then we're going to understand what each of those tools or each of those indicators actually means. And then we will take that logic into the chart, into the market, and test it. And then we're going to see what's going to happen. And if this is not the first time you are joining me today, you are already familiar with this strategy because it is one of the most easiest and most simplest strategy, and yet it is one of the most effective strategies that you can use to trade on IQ option. And so our tools or the indicators that we're going to be using are 3 different indicators or 3 different tools, and these are EMA. And then we're going to be using 2 different EMAs. EMA actually means exponential moving average, and it is a moving average basically. And so we're going to be using 2 different moving averages because we're going to be using a strategy called moving average crossover, right? And so we're going to be using 2 different moving averages because in moving average crossover you put 2 different moving averages, and then you sort of look at those indicators, and when those moving averages crosses, if one moving averages crosses above or below the other moving average, that give you a signal that you are actually looking at or you are looking for, and it means something when you are trading. And so in the next few minutes you'll understand what we're talking about, but we're going to be using 2 different moving averages, and then we will be using RSI. And RSI is means, what RSI stand for is relative strength index. And so we're going to be using it as well, and then we're going to use them. Sorry guys, I'm going to take some water. Okay, so as I'm saying, we're going to be using these 3 different indicators at the same time, so that we'll be using a confluence strategy when those 2 different indicators cross above, if the moving average crosses below, if the moving average 7, so we're going to be using moving average 7 and moving average 14. And so say the moving average 7 crosses above the moving average 14, we will actually know what happened, and then we'll also look at RSI and see what RSI is actually telling us, and then we will combine those factors or those signals, and then we will know whether to buy or to sell or to stay out of the market. So that's what we're going to be using tonight. But before we start, one important point that I wanted to make is that a signal is not a guarantee, right? The market can move against any setup. There's no indicator and there's no strategy that is 100% guaranteed, because there's always a possibility that the market can actually move against your setup. There's always a possibility that the market can actually move against you. And so the goal is to follow a clear process, and then use a control, a risk management to sort of control our our capital, and then we have to know when not to enter the trade at all, when not to trade and when not to enter the market. And so these are the very important things that I wanted to talk about. And also I want to make this very clear. This is not a financial advice. This is solely for educational purposes. And so you should trade responsibly. And let's dive straight into it. So I'm going to open a slide here. So here we have EMA 7 and EMA 14. I'm going to look at this in a second. So what do we have here? Okay, guys. I wanted to be looking at the chart so that I can see what you guys are actually saying in the comment here. I wanted to join you guys in the comment, and so I'm actually sure. Okay. Sorry guys, I was trying to join you in the comment section. Okay. That's 09. Okay. Thank you guys. So let's get back to what we are actually doing at the moment, without wasting any more time. So anyway, guys, as I am actually saying, so let's start with the basic question here, right? What is a moving average? And so a moving average actually calculates the average price over a selected number of periods, right? And so as a new data comes in, the calculation update and the averages moves the market. And so that's what a moving average actually means, right? A moving average is just a technical indicator that actually calculates the average price of an asset over a specified number of periods. And so that's what a moving average actually means. And so with the calculation actually updating as the new price data becomes available. So the reason traders use it is actually very simple, because price can move very quickly and actually look very noisy. And so a moving average smooth out the movement, and it can make the general direction easier to see. So that's why many traders actually use it, but it is calculated from previous price data. It does not actually know what the next candle will do. It is actually calculating what happened before, and then you can use it to actually predict the future and to sort of see what's gonna happen, right? And so as we talk about the period as well, and so the period is just 1 unit of price data used in an indicators calculation. And so when you're using a 1 minute time frame, 1 minute chart, one period of a moving average represent 1 minute candle. And so depending on your candle, it's just, if you're using a 1 minute a 1 period moving average, you mean after you're just reading one last candle. And so if you're using a 7, as you can see, we'll be using a 7 and 14. And so if we are using a 7 moving average, it means that we are using we are counting on the last 7 candles. So that's what we're going to be actually doing tonight. And so now just to actually move forward, the next indicator, as you can see, is the RSI 14. Sorry guys. So yeah, that's what I'm saying. The next indicator is actually RSI 14, and so these are the indicators that we're going to be using, but we will be using what we call EMA. And so EMA stands for exponential moving average, right? I'm going to open the next slide so that you guys can actually see. So as I am saying, exponential moving average, or an EMA, is a moving average that gives greater weight to more recent price data. And so it actually responds more quickly to recent price changes than a simple moving average. And that's the reason why we're going to be using an EMA, because we are trading the binary options market. And if you're trading a binary options market, you're going to be using an exponential moving average, because it actually it responds more quickly to the recent price changes than the actual or just a simple moving average. And a simple moving average is still called SMA. So that's simple moving average, and we're going to be using EMA, which is exponential moving average. And so there are just different types of moving averages, and the two we need to understand at the moment are the simple moving average, which is just SMA, and then the exponential moving average. And if you are trying to use the moving average on IQ option, when you went to the indicator section, you will see those options. And so I just want you guys to actually focus on the exponential moving average. So that's what I want you guys to actually focus on. Now the reason why we're going to be using these two different moving averages is because there's a strategy called moving average crossover. And in a moving average crossover is a strategy where you would have two different moving averages. And when you have those two different moving averages, you're looking at when one of those moving averages will cross above or below the other moving average. And say, for example, say we are using a EMA 7 and EMA 14, right? And when EMA 7, or when the moving average 7 crosses above the EMA 14 or the moving average 14, that is the moment we are looking at. That is when we know what's going to happen next. Like if the market is actually going to go up, or if the market is actually going down. And so that's why we're going to be using two different moving averages, because we want to look at that crossover. And so that's why it is called moving average crossover. It's just that the EMA 7 is faster, even though exponential moving average is also a fast moving average, but exponential moving average 7 that we're going to be using is faster than the moving average 14. And so that's why we are combining those two different moving averages to know what is actually going to happen in the market and what is happening in the market. And then we can use that to make a trading decision. Yeah. So that's for the moving average 7 and moving average 14. So we're going to move next to an RSI. Hopefully I have the... Yeah. So this is the next slide. We're gonna enter the market right now. I'm gonna open the chart right now. Maybe even before we move to RSI 14 actually. And so before we explain RSI 14, let's just go into the market and put our indicators, the two moving averages. And so we're gonna open the chart actually right now. Okay, here we are. And so if you are new here, or if this is the first time you are looking at this chart, or you are looking at this market, or if this is the first time you are looking at IQ Option, so IQ Option is a trading platform, and it is the platform that we are actually using. And if you didn't have an account with IQ Option, if you want to create your account, click the link below this video. In the description of this video, there's the link to the platform. The platform link is in the video's description. You can click it and you can create your account. And if you want to join my Telegram channel, it is actually it is absolutely free. You can join for absolutely free. You can click the link below. The Telegram channel link is also in the description of the video as well. And so yeah, as I am saying, if this is the first time you are looking at IQ Option, if this is the first time you are joining the IQ Option platform, and if you already know what IQ Option is, or if you're already familiar with the IQ Option platform, that's okay. But for the beginners, this is how the platform looks like. This is what you're gonna see for the first time of joining the platform. And so at this section, you can click the deposit button to deposit your to deposit money into your account. And right here is where you will invest the money, how much money you want to. If you think that the market is actually going up or it's going down, how much money are you investing, not your entire capital. Say for example you deposit $100 and you want to be trading with $1, and so you just come to this section and click, and now you can be trading with $1. And right here, this is your expiration time, and what this means is that after 30 seconds, 45 seconds, 1 minute, 2 minutes, 3 minutes, or 5 minutes, depending on the expiration time you choose or you pick, it means that after, if you say for example you choose 3 minutes, it means after 3 minutes the trade will close automatically. And if you are in profit, or if you made a profit, you will receive your profit. And if you lose the trade, you will lose the amount you put in that trade. And so you will not lose your entire capital. What that means is that you will lose the amount you invested. And so if you have $100 and you put $1 in that trade, that means you lose $1, and now you have $99 left. And so that doesn't mean you lose your 99 bucks. You still have your $99 with you. Unless if you put the entire $100 and you lose it, and that would be crazy. Which is why you have to focus on your risk management. That is very important, because nothing is more important than your capital. Because if you lose it, you are no longer in the game. That's basically a game over for you, and you don't want to be in that situation. And so this button right here, the higher, it means buy. So if we think that the market is actually going up, we just click buy, or we click higher, and then after 3 minutes, if our analysis is correct, we won the trade, and then we receive our profit. And if we think that the market is actually going down, we just click this lower. This is sell, it is sell or lower, and this is buy or higher. And so sell is lower and buy is higher. So if we think that the market is actually going down and we want to sell, we will just click this lower, and then we will open a selling position or a selling order. And so that's for this section. And around here you can see plus 82%. It means that if we put $1, we will make 0.82 cent. No matter how much money you put in, you will make 82% of that amount you invested. And so that's what this means. And then this section right here, if we want to add many more assets, we can just come to this section and just click it. You can see that there are many different assets that we can actually trade with, or we can choose from on IQ Option. When you come to the options right here, you can see the many currency pairs that you can trade, binary options, the OTC market, that's over the counter or whatever. And so here's the GBP USD, USD PHP, Euro USD, Euro GBP. There are many different assets that you can trade with. You just click it, anyone you want, and That's for the binary. If you come to the margin section around here, right, you will see that there are forex pairs. If you want to trade forex pairs, you can just come to the forex section. You can trade forex pairs. And if you want to trade stocks, you can come to the stocks section. You can see many stocks in the forex pairs. Sorry guys, you can see that all these are the forex pairs, but because this is the weekend, we cannot actually trade the forex market in the weekends, and so all the markets are closed, right? The markets are actually closed, so we cannot trade the forex pairs. And so these are the stocks as well. You can see there's OpenAI, Anthropic, Bank of China. You can see all the you can see any sort of any stock you're looking at, or any stock you're looking for. Tesla, Microsoft, SpaceX, Google, whatever. You can find all those. You can see I just see Tesla around here. And if you didn't see the stock you're looking for, you can just search it in the search bar. You can it will come up, and then you can trade it. But it is of course the weekend, so we cannot be able to trade these stocks. And so yeah, you can see Meta, SpaceX, Microsoft, Broadcom, Intel, Amazon, Tesla, Taiwan Semiconductors, of course. AT&T is here, Micron Technologies. And so that's for the stocks. And if you come to this section, you can trade the crypto pairs as well. You have the Bitcoin, Ethereum, Ripple, Monero, BNB, Stellar, Pudgy Penguins. We have the Trump coin around here, Solana, Hyperliquid. And so if you wanted to actually trade the crypto pairs, here the crypto pairs. And the next thing is the commodities. If you come to the commodities section, you can trade any commodity you want. The gold is here. Here's gold. The market is actually closed. Palladium, crude oil, platinum, copper, that's the gold, and then natural gas, silver, corn, cotton, sugar, coffee, cocoa, soybean, you know, there's wheat. So you can trade the commodities if you wanted to trade the commodities. And then in the indices section, you can actually trade the indices as well. The market is of course closed. And then we have the ETFs around here. You can trade the ETFs, right? But the markets are all closed because it is the weekends. And so this is the asset section, and we are trading the binary options. And so here's the bullish option, right? And then the binary is 17 digital. So you can just click the asset. For example, let's say we wanted to click the GBP JPY, which is the Great Britain pounds against the Japanese yen, right? So then we can trade it. But we're here to actually choose the moving averages. And so the first one we want to do is that we want to remove this line. This line is actually following the price movement, and so this is the price movement. And if you look at this, you don't know, or you have no idea what's actually happening. And so we're going to change that from this trend line to actually candlesticks, so that we can understand what is happening in the market. So you just come to the chart type around here on IQ option, just click chart type, you click it, then you come to the candles. This is the candle section. You just click candles, and then now you have the candlesticks. And so if this is the first time you're actually looking at this, what this green candle represent, the green candle represent a bullish market, or it represent the bias. And so whenever you see the green candle, it means that the buyers are in control of that period, or that market, or that moment, whatever. Just think of it as a fight between buyers and sellers. And so during the fight, when we have a 5 seconds candlestick time frame, and what that means is that after every 5 seconds, we will have a brand new candle. And so within that 5 seconds, if you have a red candle, it means that the sellers have overpowered the buyers within that 5 seconds, and that the market is going down. And if you have a green candle, it actually it basically means that the buyers have overwhelmed the sellers, or overpowered the sellers, and they took control of the market at that moment. And so we want to change it from 5 seconds candle, which is very fast, it's incredibly fast. We want to change it to like 1 minute candlestick. And what this means is that after every 1 minute we will have a new candle. It doesn't mean our trade would close after every 1 minute. This is the candlestick period time, not the expiration time. The expiration time is still here. You can see it 3 minutes. And so this is very different, and it's very important for you guys to understand the difference between the expiration time and the candlestick expiration time. The candlestick expiration time is how long the candle would take to close or to open a new candle, and the expiration time, it means that the trade expiration time it means how long your trade is going to take before it closes, but it will close automatically because this is binary options, of course. And so the next thing we want to do is to add our indicators, right? We come here to add our indicators. By the way, this is the IQ Option platform, and if you want to create your account, if you don't have an account with IQ Option, the link is below this video, is in the description of this live stream. Sorry guys, it is in the description of this live stream. You just go to this description section and then click it. You can create your account, and if you want to deposit, you can just click the deposit button around here and it will take you to the deposit section, and you can see that you can deposit money using bank transfer, using Visa, using Apple Pay. You can deposit with crypto, USDC, Bitcoin, Cardano, Ripple, Litecoin, Ethereum, Tether, USDT. You can deposit, and as well you can deposit with Google Pay, Skrill, Wallet.com, Mastercard, and Netella. You can deposit with all of those things. What I mean by this, you can deposit using your credit card, credit or debit card, whatever. So you can deposit money into your account. Then you can start trading with the IQ Option platform. And if you want to learn more about the IQ Option platform or how to trade on IQ Option platform, there are some videos in the channel. You can look up those videos and you will learn more, and I'll be very happy to answer your questions if you have any question. And of course you can join my Telegram channel. The link is in the description of this live stream, so you can click it if you want to join my Telegram channel. It is absolutely free to join. Yeah, so as I am saying, now the next thing we're going to want to do is we're going to add our indicator. So we just come to this section. This is the indicators section. It is the indicators marketplace or whatever. So you come to the indicator section and you can see here's a moving average. If you didn't see it, you just search moving average, it will actually come up. You can see it right here. Just click it. Now we want to use two different moving averages, right? There's moving average 7 and there's moving average 14, and so we want to start by putting the moving average 7. So we just delete the period 14. This is the period, so we change it to 7. So the period is 7. This is our first moving average. So we want to change it from simple moving average to exponential moving average, which is EMA. So we just come to this section and change it to EMA, and then we want to change the color so that we can actually differentiate and we can understand what is happening, right? You can use any color, maybe white, we can use yellow, we can use green, but we're going to stick with the yellow so that we can see it clearly, right? So we change the color to differentiate the faster and the slower moving average. And then we're going to come right here. This is the thickness of the line. The moving average, as you know, it is a line, and so we want to make sure that we can see the lines very clearly. So we would use this thicker line at the center, so to thicken the lines. So we actually thicken the lines, and you can just click apply. And now, as you can see, we can see clearly the moving average. Yeah, so the next indicator is another moving average. So we just go to the indicator section, we click it, we come to the moving average, we select it, and then we leave the period as 14. We change the simple moving average to exponential moving average, and then we leave the color as red, and then we change the lines to thicker lines. We just thicken the lines to see it very clearly, and then we click apply. And so now we have the moving average. And what we are looking at here is to explain what we are actually looking at, or why we want the moving average. So here's how it works, right? when the red moving average crosses above the yellow moving average. The yellow moving average is the faster moving average, and the 14 or the red moving average is the slower moving average. And so when the red moving average crosses above the yellow moving average in a downward direction, it is indicating that the market is going to start going down, and it is time to actually sell. And not just that, but you have to make sure that the moving averages are above the candle. And so when the moving averages are above the candle, it means that the market will start going in a downward trend or in a bearish momentum. So that is what we are looking at. And if you're looking for a buy signal, you just, as you can see around this section, you can see that the cross happened around here. The yellow moving average crosses above the red moving average, and then if you look at the candlesticks, you can see that they are above the moving averages, and that indicates a bullish momentum, and it means that the market is actually going up. And so if you open a position around here, it's still going to be profitable because we have a 1 minute candlestick, and if you calculate from here 1 2 3, we would still have a 3 minute moving average around there. And around this section, you can see that 1 2 3 4 5, for 5 minutes the market continues to go down, and it's still the trend is still in a bearish trend, or it is a downward trend. So that's what we are looking at. And so now we're going to add some few more assets so that we can have many different assets that we can actually trade with. And then let's add maybe pen USD, right? We have pen USD around here. So we're just adding some few assets so that we can have some few different assets that we can actually look at. We can add Australian dollar or something. So just adding some more asset. We have AUD USD around here, right? But anyway, guys, we're gonna go back and talk about RSI, and then we will come back and start taking some trades, right? Yeah. Okay, guys. So coming back to RSI. So RSI is a momentum oscillator that measures the magnitude of the recent price changes to sort of evaluate the speed and the strength of a price movement, and that's why the name is a relative strength index. And so it is actually using that to evaluate the strength of the market, of a price movement, using a scale from 0 to 100. And so just like you can see it in your screen, what do we call it? Sorry, guys. So the key level that we're going to be looking at, the main level that we're going to be watching is the 50 level. And so I want you guys to think about the 50 level as the middle of the scale. RSI is above 50. It generally indicates a positive momentum, and it means that the market is going to be a bullish market, or a bullish momentum. While if RSI is below that 50, it generally indicates a negative momentum or a bearish market. And but here's the thing: RSI can also be used to sort of study the overbought and the oversold conditions. But today our main job is simply to use the 50 level as our momentum confirmation. And again, RSI is not a prediction tool, right? It does not guarantee that price will continue to go in a certain direction. But what we're going to be using the RSI to do is we're going to be using it to confirm the bearish or the momentum, the strength of that market before we open a trade. And so that's why we're going to be using RSI. And so above 50, it means there's a bullish strength, and it means, just think about this: the above 50, it means that the market the market is in the buyer's territory, and below 50, it means that the market is in the seller's territory. So just think of it like this. So that's why we're going to be using the RSI. So let's get back to the chart and then add the RSI, and then we would come back. Okay, so the next thing you're gonna do is you just come back to the indicator section. You click it. You come to the moving average. Sorry guys, not moving average. My bad. You come to the indicator section. You look for RSI. You just search it. So here is the RSI. So here's the RSI, relative strength index. You just click it. And just leave the default setting, right? You can see that the period is just at 14, and these are the labels, the overbought level and the oversold levels, or the zones, wherever. So you just click apply. But before we just click apply, as we said, when that 50 line is above the 50, it means that the market is in the buyer's territory, and when the market is below 50, it means that the market is in the seller's territory. When the level hit or reach level 70, or it reached 70, it means that the price is overbought, and now there's a possibility of a reversal. It means that the price have reached a overbought zone, and that the market might possibly reverse and start coming down or going in a downward direction. And when the market reached this level 30, it means that the price is already oversold, and there's a possibility of a reversal from this level, that the market will start to be going in an upward direction. So we just click apply, and now you have the RSI, and you can see that the RSI is moving above the line 50 around here, and we are looking at the moving average is trying to cross around this section, but this is very important, right? We cannot open a trade without confirming the cross. So the cross need to happen, and then RSI need to confirm that the market, or the buyers have the strength to hold that market for a few minutes, or for a certain period of time, so that we don't end up losing our money or losing the trade. So yeah, coming back, I do have a slide around here that we can actually look at. So I would open the slide so that you guys can see. So let me minimize my my camera a little bit. So here's the bullish setup. You can see the bullish setup around here, and you can see the bearish setup around here, right? So just as I have already explained, but for the bullish setup, we want the EMA 7 to move above the EMA 14, and then still we have to check the RSI. If RSI is above 50, that gives us additional confirmation that a short-term momentum is positive, and that the market will start going in an upward direction. And for the bearish setup, we want the EMA 7 to move below the EMA 14, and then again we have to check RSI. If RSI is below 50, that gives the that actually give us additional confirmation that a short-term momentum is negative, and that the market will possibly start going in a downward direction. But this is very important. The EMA crossover and the RSI are working together, but neither one is a guarantee that the market, none of them is 100% guarantee that the market would go up or down. But it helps us to actually predict the possibility of a downward trend or an upward trend. But you have to trade responsibly. So this is why I always emphasize risk management. Follow the risk management. Follow your risk management. And don't gamble with your money, and don't hurt yourself. So yeah. So we have one thing that there's another thing that I wanted to show you guys before we left, before we went back to the chart, and that is when not to trade, because this is very important, right? And so sorry guys, if the two, for example, if the two EMAs are crossing back and forth like repeatedly in a very short period of time, and the market may be moving sideways, in that situation, what you have to do is you have to trade as much as you can to avoid the market. The strategy can sort of produce repeated false signals, and so if you fall for this false signals, you will lose money, and it's going to be very bad for you. Apologies guys. So that's going to be very bad for you. So it is very important. What the hell is going on here? So it is actually very important for you guys to sort of let me, so that you can see it clearly, right? So just don't trade at that moment. Don't open a trade at that moment. And if the lines are sort of tangled and the candles are moving in sort of in both direction, and also RSI is moving around 50 without clear momentum, don't enter a trade at that moment. So this is just very important, something that I wanted to show you and to tell you to be very careful, and to have the discipline to be patient for the setup to for the opportunity to show up, the real opportunity to show up before you open a trade and before you execute any trade. So this is very important, and we're gonna get back to the chart. We're gonna get back to the market and look for some entries. But the reason why I kept emphasizing risk management is because in trading, your weapon is your capital. And so if you lose your capital, it means that now it is game over for you. And not just that, not just because it is game over for you, but it's still gonna hurt you very badly, because you lose your hard-earned money, or you lose your trading money, and now you cannot be able to trade. And so you'll just be sidelined. You just be looking at other people trading. So you have to protect your capital at all costs. Think of yourself as a soldier in the middle of a fight, in the middle of a war, in a war zone, or in a war field. And when you are a soldier in a war zone, your weapon is the most important thing that you care about, because if you lose it, it is basically not complete game over for you, right? But you can survive by some luck. But the point is, if you didn't have a weapon, you can't fight, right? You cannot fight someone with your bare hands when he's far away and he can see you with his gun, and you didn't have a gun, so you are finished, right? So your capital is your weapon. That's the point. If you lose it, you cannot trade. So you have to protect your capital at all costs. That's very important. And so I'm gonna take some water. So that's why you have to use a risk management, because even a good looking setup can still lose. There's always a possibility you can lose a trade at the last second. That's very that's real. Like, it's very real. You can lose a trade at the very last second, but that is normal in trading. Like, if you're a professional trader, if you're an experienced trader, you already know that it is normal in trading. But risk management exists because we knew, or traders knew, that something can go wrong. There's always a possibility that something can go wrong. And so if you saw an opportunity, you're using this this strategy, you saw a signal, or you saw an entry, it's a very clear entry, you have a very good entry, there's still a possibility that the market can actually make an overturn, a U-turn, and you can lose your money. So it is very important to have a very good risk management. And so the first rule is simple: never increase the amount because the previous trade is a loss or a profit. A loss does not make the next setup more likely to win. So if you increase the size, if you increase your position size because you lose the last trade. Now if you lose, it's like you lose 3 different times, and that's very bad, and you will blow up your account very easily using that mentality or that method. And so it's very important for you to have the discipline, and at the same time, if you win a trade, the last trade, it doesn't guarantee that you will lose the next trade. And so if you increase your size and you lose, now you lose the profit and the investment capital. So that's why it's very important to have the discipline not to increase your position sizing. And then the second rule is consistency. If the trading plan uses a small sort of predefined amount per trade, keep that rule consistent instead of changing it because of new signals, new opportunities, or because of emotions, because maybe you won some trades or you lose some trades, and so you decide to increase your position. So you need to have the discipline to be consistent with your position sizing. So that is very important. So we're gonna get back to chart and look for some entries, and then we can trade. But this is very important, and I hope you guys understand what I mean. So let's get back to the market and look for opportunities. So here we are. I'm gonna increase this a little bit so that you can see me clearly. And then so we are having a cross around here, and it seems like the market is in a bearish momentum, and then the RSI is below 50, and that might be a good signal or a good entry for us. But we're gonna wait a little bit for this to close, this candle to close, before we make a decision. Yeah. So let's see. I guess we can enter for maybe 2 minutes or maybe 3 minutes, doesn't matter, but we can still have an entry. Let's put $10, right? And doesn't matter, we still have an entry. So guys, the reason why we entered this trade is because based on the signal, we can see that around here the red moving average crosses above the yellow moving average, and the market seems to be going in a downward direction. But not just that, you can see that the candles are below the moving averages. Both the yellow and the green moving, the red moving averages are above the candle. And so when the candlesticks is below the moving average, it sort of indicate a bearish momentum, and it is indicating that the market is actually going down, or it is just indicating a bearish momentum. But there might be a reversal around here, right? It's very unlikely, but it is very possible. Yeah. And at that moment, we can see that RSI is below 50, but now it is reaching the oversold zone, and that's like very bad, right? We don't want the market to hit a reversal zone when we are still in that trade, right? But the good news is that the market is going down, and we're having a very large red candle, and we can see that the market continue to go in a downward direction. But that is the reason why we enter the trade around here. We have the cross happen around this section. We wait for this candle to close to sort of confirm that the market is actually going in a downward direction, and we can see that the candles are below the moving averages. And then at that moment, we can see that the RSI is below 50, is below level 50. But now the RSI have reached an oversold zone, and the market might actually start reversing. That's very possible. And we can see that we're having a green candle, but it doesn't actually, it doesn't always means that the market will just continue to go up. But it seems to be reversing at this moment. And it seems like that's like the floor, right? But our trade is still profitable. We can see that the trade is still profitable, and we'll actually win this trade, hopefully, right? Three, two, one. So we have won the first trade, right? Because we entered 2 different times. I wanted to enter for $10 with $10, and I entered with 3, 2, 1. So we have won the trade. As you can see that we have won the trade, and that's really good. We can look for another, like, right? There's a bullish momentum around here. You can see that the green candles are actually above the moving averages, and I don't have an RSI around this section, right? Don't understand why, but so we have the RSI around here. So guys, I guess this will be the end of the whatever. So guys, we have actually I hope everyone joining us today have understand what happened tonight, have understand the RSI, the moving averages, and how you can use them. And I still have another video on the channel that you can watch to learn more about the entries. We have some different entries on that video, but I want you guys to have the patience and the discipline to wait for a clear entry before you open a trade. That is very important. And just like we talk about the risk management, it is very important to have a risk management. Please guys, you need to be serious on your risk management, because that you have to protect your capital at all cost. That is very important, because no matter how effective a strategy is, there's always a possibility that you might actually lose your money. And I don't want you guys to blow up your account and to lose your money. So that's very important. I want you guys to be profitable, and I want you guys to stay ahead of the market. And if you learn valuable lessons in this live stream, make sure that you click the subscribe button and click like this live stream, like the video. And if you have any comment, leave your comment. And I can't wait to see you guys on another live stream. I'll be trying to hold a live stream every single day from now on. So make sure that you subscribe to the channel and click the bell icon, so that you will be notified whenever I go live, whenever I post another video. But thank you guys for joining me today. I really appreciate everyone that joined that joined me today, and I really hope you learn a ton of valuable lessons in this live stream. And I hope you learn and you understand how this strategy works. And I hope you can try it on IQ Option. But if you didn't have an IQ Option account, the link is below the description of this live stream. It is in the description of this video, so you can click it and you can create your account and you can deposit money into your account. You can start trading, but you have to protect your capital at all costs. Trade responsibly and protect your capital at all costs. And remember that no indicator can predict the market with absolute certainty, right? There's no indicator that is 100% guarantee. So that is why you have to be very serious on your risk management. Stay safe out there, stay disciplined, and I will see you in another live stream. I will see you tomorrow in another live stream. But thank you guys for joining me today. I really hope you enjoyed the live stream. I really hope you enjoyed this video. I really hope you enjoyed this session, and I really appreciate you guys coming in and joining me. I will see you in the next live stream. Thank you.